Okay, ladies and gentlemen, we are about to begin the webinar on risk assessments, the best practice and practical approaches, presented by myself, Sonia Luna, and Monica Raffety, who's also a COSO implementation member. Good morning, Monica.
Good morning, Sonia.
All right, how are you?
Good. How are you?
Good. I'm really excited to get going and share with folks kind of what we've been working on in the last 2 weeks, I would say, developing a presentation that was somewhere, I'm calling this one a presentation somewhere in the middle in the sense that it's a good refresher, let's say, for people who are at that senior manager or chief audit executive level, but it's also a good practitioners webinar where the people who actually have to do the work have a practical guideline to review certain templates. So I'm really excited to share this with everybody. Let's just talk about the rules of the road, so to speak. In order to receive continuing professional education, you must click on this pop-up thing that will show up. It says here, I certify that I am present and actively participating in this event. So you'll have to be clicking on that button every 15 minutes. It'll automatically show up, so don't worry about when will it show up. It'll show up. However, we track that, and without you doing that, you will not receive any continuing professional education. I think the button, if I'm not mistaken, from a user's perspective, might look like a green button, and it says something to that effect, that statement that you're actively participating. All right, without further ado, I will move along with something that's important, which is our bios. I'll give out my bio and Monica's bio very quickly. So me personally, I've got over 16 years of internal and external audit work. I worked at 2 of the big 4 firms. I left as an audit manager to create Aviva Spectrum in 2004, which is an internal audit service provider. We've worked nationally here in the US as well as globally, like India and China, etc. And you can always check out my bio in LinkedIn. And then Monica, she has over 15 years of internal audit and compliance experience, and she began her career in the financial services industry, actually, in banking, and she had several different internal audit and risk management roles. She's also a former president and is a current board of governors, like myself, with the San Gabriel Valley Institute of Internal Auditor chapter here locally, and I'm on the board of governors here in Los Angeles for the IAA. So we do a lot of volunteer work, as you can probably guess, and we're actually volunteering our time. We actually don't get paid for doing presentations for COSO implementation members. This is actually kind of a give of an online community. Now, that being said, I do have a disclaimer to provide everybody here. It's simply that the comments, statements, views, and opinions expressed in this webinar and other printed material do not reflect the views or opinions of the presenter's current or past employers. So they're our own kind of individual opinions and do not reflect current or past employers. So keep that in mind. Now I'm going to move on to a slide and switch over for Monica to kind of give us a sense of the risk, just an overview, like what is the risk assessment planning process, Monica? How do you see this?
Thank you, Sonia. So as you see on your screen, there are really 4 areas that are part of a risk assessment planning process. You may call it differently in your organizations, but one of the first things we want to do is, one is establish the purpose and identify the risks. The second part we'd want to do as part of our planning process is we want to measure the risks, right? If we can't measure it, how do we know what we need to do? And then lastly, using those risks, how do we prioritize them to develop our audit plan or audit project? And then lastly, how do we review, report, and communicate those results? So as we go on into the next few slides, we're going to talk in a little bit more detail about each of these different areas. I'm sorry, it went up one slide. There we go. Thank you. So the first area that we want to do is we want to establish the purpose. So our new COSO framework actually requires us to focus on financial misstatement and fraud, but we can also think about other areas that we want to focus on. Then we want to collaborate with our stakeholders. So for example, some of our compliance functions can be internal audit, compliance, business management, and IT management. But then we go back and we ask ourselves, well, how do we go about knowing what the risks are in our particular organization or business unit or line of business? So there are several ways that we can do this. We conduct risk assessment meetings. We hold interviews with either our management, business line management, or key stakeholders. We complete risk assessment questionnaires. We can perform site visits to really validate our understanding of the strategy and initiatives that our company has. We also try to understand if there are any new products or services that can impact our current control environment or business environment. And we also look at system changes or any new technology that's coming on the horizon. Then another step that we perform is we look to establish ownership of this risk assessment process. Should it reside only with internal audit? Does it reside with the enterprise risk management function? Does it reside with our internal compliance functions? Or is it really an ownership that's maintained by all three groups? Then in order to make it effective, we need to decide how often are we going to review these risk assessments. So some organizations, especially if they're large and they're publicly traded, they'll want to review the frequency on at least a quarterly basis. Others might look at it semi-annually, and even others might look at it on an annual basis. So again, there really is no one-size-fits-all, but as an organization, you need to determine what is the appropriate frequency to review your risk assessment. And lastly, which I feel is the most important, is we should be creating a format that is easy to review. So if we create a format that is Excel-based, has many formulas, many different colors, it'll be hard for people to maintain it and or our stakeholders to understand. So we want to put it in a format that's easy to review and easy to understand, and one that you can quickly use to communicate to your stakeholders and or other key constituency or groups. And if we go on to the next slide, go down here. We have an example here of a risk assessment questionnaire. Now, what we're showing you here on the screens, you're actually going to have the templates available to you. And Sonia did mention to me earlier that the templates will be available, I believe, through our shared site, right, Sonia?
Yeah, it'll be available. We have other free templates as well for like COSO transition items, and it'll be on avivaspectrum.com/blog, but also just as some of you on the line with us today, there's actually a download file, and it's in PDF. It's the PDF version already of the various templates we're going to cover. But the blog at avivaspectrum.com/blog, you're going to see a download button, and you just got to give me a few days. I'm talking today later with our website guy to make sure within 7 days we've got the templates ready for you. But right now we have the PDF version ready to download.
Thank you, Sonia. So what you're seeing on your screen is an example of a risk assessment questionnaire. This particular one actually has about 20-something questions, and it's broken down into different areas. They talk about strategies and objectives. They talk about the IT applications or systems that are used to support their business processes. They talk about listing their applicable policies and procedures that support or impact their business. And there's also an opportunity for the business unit or owner to list out what are their key spreadsheets, critical spreadsheets, or end user computing controls, or whatever you call them within your organization. And then there's also a change management section built in here. So by conducting these risk assessment questionnaires, not only can you identify potential risks, but you can also add value by identifying areas where audit or internal audit can serve in a consulting capacity. Now, if the questionnaires are distributed semi-annually or annually, that might not be a sufficient frequency to understand all the changes occurring in your organization, especially if it is large, complex, or spread across different regions in the nation or even globally. Sonia, is there anything you'd like to add?
Yeah, I mean, also kind of covering the prior slide and this questionnaire, A lot of people may forget some of the Institute of Internal Auditors professional standards. It's actually in the 2100 series, which is on the planning, and then there's 2400 series, getting more in depth with the analysis with your audit program, which is supposed to be a risk-based program. And the point I'm trying to get across is that if you're running an internal audit function in your organization, the consensus within, let's say, the executive management team and maybe even below the executive management team is that you guys do all the risk stuff, and whatever scoring and analysis you do really has little to do in terms of input by management. But the reality is our standards actually say we're just the advocate of the process. The actual risk management policies and procedures, you can craft it, but the ultimate ownership is really with management to execute it, because internal audit does not have the function of checks and balances implementing them. They execute the objective review of a top-down risk-based approach and then come up with a plan to test the validity of what management believed is a risk, high risk area for them. So this template that we're covering in terms of the questionnaire, which we'll get into more detail with the actual template itself, is just like the preview, if you will, of how would you start crafting in various sections, to management, key items. And this, I like the way this one's laid out in particular, because it does talk about IT applications as well as critical spreadsheets, with which, if you're, those of you who are on the call with us today that are publicly traded, you know that there's some critical key reports now being tested, and a lot of us function outside of the main system. And in essence, this is a great starting point. You can see the manager responsible on the right-hand side of it. This template's forcing you to engage with management, and that's one of the key comments I wanted to get across, is that it's not just internal audit or compliance function in a bubble that they get to dictate the risk score without the involvement of management. It's actually a collaborative effort to get things done for a risk management process.
Thank you, Sonia. So continuing on with the same section, we're going to go on to how do we identify the risks. So as part of the measuring and identifying, so when we're identifying the risks, we need to figure out which risks would impact the achievement of our organization's strategic and business objectives. So for example, some of the ways that we can identify risks is we look for regulatory literature for our industry. So for example, when I used to work at the bank, one of the areas that I would go to, I'd go to the OCC, or the Office of the Controller of the Currency, for the risks affecting financial institutions. What we included in here is the actual link so that you can go out and it'll actually take you to the report that's called the Semi-Annual Risk Perspective for fall 2013. And it lists some of the key risk areas, not only for small, but medium and large financial institutions. So for example, the OCC has indicated for the large financial institutions that some of the higher risk areas is really overall compliance and the Bank Secrecy Act, as well as the anti-money laundering. They're looking at underwriting standards, because of competitive pressures. They're also looking at vendor or third-party risks, in particular, for example, data breaches, right? So we've heard about what happened with Target, what happened with Nordstrom. They're looking at data breaches not only that occur at the actual vendor, but data breaches that occur because of the vendor, and also looking at their hosted environment. Is it stable? Does it go down often? How is it supporting our institution? In addition, some of the other areas that the OCC is looking at is, operational risk. So we know that in our current, business environment, many organizations are being asked to do more with less. And sometimes some of the first areas that they cut through is, well, okay, I don't really need to be looking at this, or wow, I'm going to relax a little bit on these controls, or I don't have time to look at these things. So that's one of the areas that they quickly look about how do they cut in those areas. They also look at, for example, in mortgage servicing, what's going on in general. And then, like I mentioned earlier about the underwriting, well, what new products are they introducing? And then currently I work in healthcare, so one of the areas I'd want to look at is the Centers of Medicare and Medicaid Services for risks affecting healthcare. So I work for a pretty large nonprofit healthcare organization, and one of the things that we mostly do is, a significant portion of our business, has to do with what we do for Medicare, and in addition to that, it's the reporting that we do. So you would look at the compliance and audit manuals to see what is it that Medicare is looking at, and are we compliant with those programs? Another area that we would look at, and this is, it's common sense to all of us, is we review the past audit reports, right? We look to see how long has it been since they did the last audit. If it's been 2 years, 3 years, or 4 years, perhaps that business unit has become a little complacent because they're saying, well, they're not going to look at us. Maybe we were low risk before, and who knows, maybe something changed in that environment that now potentially is high risk, but we haven't looked at it. We also want to look at the prior findings. So what were some of the issues that they had in the past? When they remediated them, is it a one-time, hey, just to get internal audit off our back? Or is this something that they continue to do and put in practice to make sure that they remain compliant? Then we also look at the number of findings. And finally, we would perform some quantitative and qualitative analysis. So, our companies, we work closely with SOX. So of course, one of the first things we look at is significant financial statement line items. We would look at establishing a threshold for materiality. So for example, some organizations look at 5% of pre-tax income. Then we look at the volume of transactions, not only in the number of transactions, but also the dollar amounts. And in turn, in doing all this work, it would help us to identify the risk factors. And Sonia, I think you had something to add on this as well.
Right, and one thing to note is for those of you who are not in healthcare or you're not a financial institution, there are other completeness checks. So basically, this review of regulatory literature is obviously very industry specific, but it is your completeness check. There are other groups, for example, FCC, there's other groups such as studies by the Institute of Internal Auditors that give you a preview of what are the concerns or risks related to certain industries. So if you're saying, well, I'm not sure what the latest and greatest in terms of risks are, surveys are actually a pretty good indicator of what matters most to certain industry-based groups. So most people have a trade association. So if you're in entertainment, if you're in manufacturing, they have annual surveys for the most part, and that's your completeness check. You don't need a government agency to give you a list. That was one kind of comment. And the second is on the regulatory literature. Just a quick story. I was out in a chapter, a IIA chapter, doing a 8-hour course on COSO, and a lot of government agencies were part of this, make up the membership group. And in this, comptroller of currency, the risk of petty, I shouldn't call it petty cash, just straight cash being collected because of the legalization of the sale of marijuana had just started in this calendar year. And so I met the chief audit executive for revenue, and his concern was there was cash piled up in certain facilities, and the banks would not allow this government agency to deposit it in their own bank account because of basically you cannot deposit funds that are infringing upon a federal law. And so the federal law, even though the state of Washington allows the sale of marijuana, the federal law doesn't, and therefore banks would be literally breaching their arrangement with federal laws, which could easily remove that bank from ever doing business in that state for breaching that law. So that there was a compromise. And so what I'm mentioning is, yeah, you can go to, let's say, the federal level at the regulatory level, but then there's a state level issue. And so there's different types of risk. So his risk, the director of revenue who's auditing, his risk was just the physical presence of cash being everywhere. That was, he was coming up with, let's say, 5 or 6 different risks of how the cash was being, um, deposited in these facilities and then evaluated in terms of monitoring, and then finally they were trying to figure out ways of actual deposits of it. But it was a very interesting case. And then finally, on the performance of performing a quantitative and qualitative analysis, uh, for those of you that are at the break-even point, and that's, if you go back to our auditing textbooks, break-even is not when you get down to zero, like your net revenue and your total expenses get to zero. Break-even is somewhat subjective in the sense that if you're, let's say, $5,000 profit and you're a development stage company, but you're very large in terms of number of employees, et cetera, you shouldn't be using pre-tax anything, okay? There's other bases to be using, such as total revenue. I know some companies do that. Or if you're a development stage and you have no revenue and you're at a loss, what basis do you use for materiality? Well, you can use total assets. And then last but not least, there are calculations that I've seen on equity, which should be your last resort to ever make a materiality judgment. So yes, your first go-to point is pre-tax, and then you move away from there towards revenue, and then you move into the balance sheet in terms of assets and equity. And then in terms of the qualitative analysis, when we get into the templates, we'll start sharing with you some factors that are industry specific. So when you're doing a risk-based approach, let's say on a project-based type audit, you can pick and choose what you're trying to achieve as the main objective of the risk assessment, and we'll kind of cover that, because there is no one-size-fits-all on the qualitative analysis. There are some basics, like you can see here, volume of transactions is one type of qualitative. Changes in the business process, changes in personnel, accounting treatment changes could be, or significant technology changes could be another qualitative analysis. So when we get into it, I think you'll find that these templates that we're going to walk you through are pretty decent, number one, and number two, it allows you to put your own thinking hat of how to apply it in your own environment.
Thank you, Sonia. And so, as we're presenting this material to you, it's not intended to be an exhaustive resource, but merely just to provide you some guidelines or food for thought. In addition, most of you deal with, third-party vendors, so you know that you get an SSAE 16 Type 2 report. You can review those to identify any additional risks. And for example, like in healthcare in general, for our particular organization, we have to worry about, the drug costs, right? Brand versus generic. Also in your suppliers, is it a single source supplier? Is it a multi-source supplier? For example, you're reading in the media that, many of the companies that had brand drugs or the blockbuster drugs, they're now merging with other organizations, or patents are about to expire. So if the drug is going to go generic, is that going to lead to less players in the market? So those are types of things that you can also consider for developing your risks. When we go on to the next slide, we're going to show you examples of how you can take these risk factors and put them together into larger buckets to help you with your audit plan. So what you see here on your screen are an example of, for example, if you look under financial, you see some examples of some of the larger risks areas, and we're saying that these types of risks can fall under financial. And if you look under the financial reporting risk, that could be like your SOX 404. Under IT, you have capacity, systems availability, so things that we talked about earlier, for example, like with your vendor management, third party, you're looking at your SSAE 16. For your legal and regulatory compliance, it's exactly like what Sonia had mentioned earlier about, if I'm a financial institution, I'm federally regulated, I'm going to look at the BSA Bank Secrecy Act, the AML, anti-money laundering, and determine, okay, what do changes in those regulations impact what I do today? And one that was not on here, but that you can kind of throw on here, is the Frank-Dodd Act. There are probably others that you could list under here. Under human resources, key personnel. So Sonia was talking about, well, what happens if I have, large changes in my organization or key people moving in and out of certain business lines or leaving the organization altogether. So you have this template available as part of the ones that you can download. It's just to give you an idea of how you can group each of these risks into a risk category that can help you with your audit plan and or your audit project.
Yeah, and so just
Sonia, is
to
there anything?
quickly comment, yeah, just to really comment on this. So imagine this is the 50,000 foot level of risk buckets, okay? And as Monica was mentioning, this bucket down over here, financial reporting risk, this just let's assume that that's the SOX, 404 bucket. But for those of you who are thinking of, well, operational risk-based audits, like, well, what could one be like? So again, these are broad categories, and what you're supposed to do from here, let's just take price risk, okay? Price risk. Let's assume you want to do a project-based audit, okay? And the project is dealing with price, your competitiveness, let's say on prices offered to your customers, okay? And some of those risks are going to be impacted by what your supplier gives you, right? So their prices and their flexibility, let's say on discounting, etc. So the project audit, okay, that you're evaluating is, I need to create how does the business run to deal with price risk, okay? And you're supposed to have brainstorming sessions, questionnaires. So going back to the earlier template, you're supposed to have a collaborative effort with management to not only diagnose, well, how does our business run where we get impacted by price risk, number one. Number two, what are the true risks related to price risks within those business processes? Number three, let's quantify it, okay? So these example risk categories, they're put in larger buckets, like, for example, financial, IT, legal, etc. The one question I typically get on the IT is mobile devices now, okay? So mobile devices are nothing other than an offshoot of what we have as a desktop computer, as far as I'm concerned, because mobile devices today can compute and analyze a lot of data, receive a lot of data, etc. But those are broad-based categories. So if you think that mobile device, bring your own device is a very unique risk in IT, you can do it. But just remember, there's the basics of physical security of that device, the capacity, like what do you want people to actually run on it, the system, how available is it in terms of downtime, and then just the sheer security risk of user access and then penetration risk from outside folks. So my personal opinion when I look at IT in terms of the risk categories, some of the feedback I've been getting now is mobile device security. Where is that? And to me, I really don't think it needs to be a separate one item, but if you have a ton of mobile devices and it's just part of your makeup as a company, then you can make, I think, a bigger argument that you would need to add an additional risk category under IT for mobile devices. But that was just kind of my overview comment for this particular risk category template that we're offering everybody.
Thank you, Sonia. So now we move on to the second planning step, which is how do we measure the risks? So what we do is we set risk levels for each activity that we're about to audit. So we looked at the risk factors that were on the previous slide 8, where we grouped all these individual risks into these higher broad risk categories. Then we would assign a risk score to each audit activity, and the risk score would be based on the likelihood or probability and the impact. Now, some organizations take it a step further and they look at potential losses. So for example, let's say I had one line of business and it's only in one region and the loss for the year was $200,000. It may not be such a big deal, for example, if it's, a $500 million organization. But let's say then I expand that line of business into multiple regions, and not only do I do it nationally, but then I start doing it globally. then that potential for that loss might be even greater. So we need to think about, it's not just, how likely will it happen? Will it really happen? But also, what is the impact, right? We have to assess how much will it cost the organization if this event actually occurs. And we think about not just the cost, but also, is there an impact to revenue? So do we have a revenue opportunity, or is there a cost mitigation that we can actually perform? And then finally, we assign a risk rating to each audit activity. So in some organizations, we do it very simply. We do high, medium, and low on a scale of 1 to 3. We do high, moderate, low. It just depends on how we want to do that, but it makes sense to assign either a numeric value or some type of word rating, so that way we know how to further identify that level of risk associated with activity. And I know, Sonia, you had some interesting comments about how some of the organizations would actually risk rate or risk score their activities.
Right. Some companies want, in terms of the scoring, just a quick comment. I've seen scoring where it's a just high, medium, low, just someone saying this is high, moderate, low, or I've seen numbers being used, 1 to 3. I've seen 1 through 5. I've seen 1 through 9. What the score, I just don't want people to get fixated on a number or the high, the word high or moderate or low. I think what's most important is understanding that the team agreed on the functionality of what they want. For example, if you guys don't want to use numbers 1 through 3 to indicate, high, medium, and low, fine. I just would rather work in a collaborative effort to say, well, what do you want? What and how does it impact the work product, so we create a sustainable process. So we are going to have to do this either every year or every quarter, you follow. So what we gravitate towards with our clients and what our clients have told us in terms of feedback is we did have the word high, we did have the word low, etc. And then we switched to numbers. And the reason why we did that is we were able to calculate in Excel kind of just the average score, and we would round up, okay, to be conservative in the risk assessment. So our risk score, if it was like a 2.5, it would end up being a 3, which would be a high, okay? But really I want buy-in when I get to the risk score, whether it's 1 to 3 or 1 through 9, etc. In terms of the rating, I've noticed that some people who are instituting the enterprise risk management framework, I know a lot of you are probably dealing with the new COSO framework, but the enterprise risk management framework, after you get to the risk rating, what's supposed to happen is you're supposed to get to risk responses, and then B, you're supposed to have, after you test the operational effectiveness of controls, right, after you did the testing and things look good, you're supposed to have what's called a residual risk. Okay, and residual risk, if I had to put a definition, it's the risk after the fact that you've proven the control works. How much risk do you have? And so our auditing textbooks have told us you can never ever get to 0. Okay, and the reason why you can never get to 0 in residual risk scoring is because there are sampling size risks. That's called sample risk. There's population risks when you sample controls and you test them. And therefore, no auditor could ever, both external and internal, no auditor could ever conclude it's 0 residual risk. You could get to low residual risk, but 0? No. So I don't see that a lot unless a company's instituting an enterprise risk management model. Do I see residual risk show up? But I just wanted to kind of throw in there that you could add it to your risk assessment measures at the end of the day to give to the audit committee, saying in aggregate the residual risk left over for this business process for SOX 404, blah, blah, blah. I personally have not been requested to do that. But it is out there in the risk assessment universe, if you will.
Thank you, Sonia. And what we're going to show you on the next slide is actually just a very simple table, explaining what can the different values mean. So again, on the left-hand side, you've got the impact. So the risk impact on achieving the organization strategies and objectives. On the right-hand side, you have the probability or the likelihood that a given risk will occur in your current control or business environment. And then we just put some very simple definitions of what low, medium, and high can mean, as well as on the probability side, what remote may be improbable. So again, this is not intended to be the final version, but it's just to give you an idea of perhaps if you decide to use, a risk scale, what types of definitions you can assign to it. And most importantly, as Sonia had mentioned before, is, it doesn't really matter what risk scale you use, whether it's like 1 to 5, 1 to 3, 1 to 4, 1 to 10. What is important is how did you arrive at that? So if somebody's asking you, well, how did you determine that this particular function is a high risk or medium risk or low risk, that you've defined what those mean, how did you arrive at that conclusion, and what's the methodology that you used. In addition, our new framework also requires that you have some type of risk assessment policy or procedure. And our organization, our enterprise risk management folks, as well as our internal audit folks, they do have a risk assessment policy that they are required to abide by, and that is looked at very often to make sure that we remain in compliance. And obviously, it drives our risk assessment process within our organization. So one thing to conclude from looking at this slide is that it provides the X and Y axis of how to conduct your risk assessment scoring.
And just to add here, just to add here, there is a professional standard in the IIA's Book of Standards, and it doesn't spell out thou shalt always have a risk assessment policy. It is referred to in the planning section of our standards, and then it's in the execution stage of our standards. Now, that being said, the Institute of Internal Auditors has a global audit survey when you get what's called a quality assessment review. And last year in 2013, it was a requirement that once in 5 years you get a quality assessment review, which basically is somebody has to audit the internal audit group. That's what that is, okay? And in that process, some of you who have gone through it probably participated in the GAIN survey. And the GAIN survey is surveying all types of industry groups globally. It's different size companies, et cetera, assuming that there's a high participation, which there is. But essentially, there are 7 common failures known of different internal audit groups around the globe, okay? And one of those 7 common failures of the internal audit group, right, not doing their job right according to the standards, is not having a well-documented risk assessment process, right? So a lot of you have this, you're going to gravitate towards these Excel spreadsheets that we're going to cover in a moment, but there's supposed to be a document that has been reviewed and approved by management. If you're publicly traded, yes, the audit committee does also have to review that policy and procedure and say, what's my role in the risk assessment process? You follow? And they do have a role. Remember, the audit committee has an oversight responsibility of the function, typically of the internal audit and the external auditors. So if there is a risk that bubbled to the surface that should have been mitigated and they were never aware of it, that is a liability on their end. Therefore, the risk assessment policy and procedure document should include some statements about what is the role of the audit committee in the risk assessment process itself, right? Maybe they don't get into the weeds and the brainstorming sessions, I wouldn't expect that, but final reports or risk conclusions, et cetera, all of that should be communicated to them for oversight responsibilities.
Right, absolutely. Thank you, Sonia. So now we're going to move on to the third section in the planning process, which is prioritizing the risks to help us develop the audit plan or audit project. So in prioritizing the risks, we're going to develop a risk-based audit plan based on the results of our risk assessment. So for example, having looked at the risks, the categories, risk factors, and the ratings that we've assigned to it will help us to determine the frequency and the scope of audit testing. And this will also help us to provide sufficient coverage for the areas that we will want to audit. So for example, we may determine that high-risk areas may need to be audited annually. For most of us, that's a given. That's what we do in practice. Medium risk areas may be audited on a rotating basis and perhaps every 2 to 3 years. And low-risk areas may be audited on a rotating basis, perhaps every 3 to 4 years. But the main thing is that by prioritizing our high-risk areas, we can determine where to best allocate our resources and also provide value to our organization. So in taking this work, we're able to determine, okay, where should I spend my time? Based on my risk assessment, if I've done it once, this is what I'm going to preliminarily allocate my resources to. And then if I go back and I reassess things, perhaps I need to shuffle what it is that I'm doing. Sonia, do you have anything to add?
Yeah, in terms of the developing an audit plan and project, there's a case study in COSO's volume 4. And the case study is basically based on a financial institution. They have different divisions, and in the case study, I think they call them A, B, C, and D. And then one of the divisions, management discovered the revenue has increased and now is material. Okay. However, in the revenue recognition process, that division, the division name is really irrelevant, but the concept I'm trying to point out here is management failed to have appropriate checks and balances, right? Controls over the revenue recognition process. So what's the conclusion in the COSO case study itself in volume 4 of its guidance materials? It says management has a material weakness on principle 9 of the new framework. And oh, guess what? Principle 11 in the control activities section. Why? What was the conclusion? The why factor is management didn't have a risk assessment process to know that this was coming. In other words, they detected this after the fact when they were doing their regular annual testing. Okay, it was after the fact they were doing a sanity check of different accounts, and all the audits were done, and then they're looking at the final year-end balances and go, oops, you know what, division C, okay, was out of scope, and we were just revisiting our materiality calculations, and we noticed that they should have been in scope in the beginning of the planning process of the audit. So it really wasn't the internal auditor's fault. It's more of management should have bubbled that up to the internal audit group saying this entity may be in scope. Here's the process of us tracking it. By the way, if it does come in scope, these are the audit areas that we need to focus on. In this case, it was supposed to be revenue recognition controls. So when I present the case study to folks, I say, see, it's the monitoring of your risk assessment process is a critical factor, and this one case study highlights for them both a material weakness in the risk assessment component of the COSO framework and then the other component in control activities. So I'm sharing that because every time I present the case study and I ask folks, okay, well, what do you think the answer to this case study is? Something went wrong. Now the question is, what's the depth of this error, okay? And over 50% of the participants, when I hold a live conference or do speaking, over 50% of them get it wrong, okay? So it is severe enough that if you just don't have a process in place to prioritize your risk and develop the right plan, you could get dinged on 2 different areas of the COSO framework.
Right, and thank you, Sonia. Now we're reaching the final part of our planning for our risk assessment process. Finally, we need to review, report, and communicate the results. So look at the big picture. What risks are you controlling? Are you controlling only all the high risks, all the moderate, all the low risks? Do you have many controls in your areas that are low risk, or have not had a material misstatement or fraud? If yes, you need to look at why. So for example, if you've had an area that consistently has been doing well in its audits, you've had no material findings, no significant changes in the personnel, everything's humming along, why would you have 4, 5, or 6 risks assigned to them? Perhaps you can think about, maybe I don't need that many, or there aren't that many in there, and maybe that's an area that I want to move to reviewing less frequently. So you want to look at, again, what risks are you controlling, what matter the most, making sure that you've got the appropriate risks assigned in the appropriate areas. For example, for us, we may think about, it's not just the high risks that matter to us, but perhaps it's the moderate ones, because those are the ones that can change over time. Then you want to prepare a risk assessment package. You can decide if it's going to be in a PowerPoint, Excel document, a Word document, but whatever it is that you decide, going back to the very first slide where we talked about establishing the purpose, you need to make sure that 1, it's easy to maintain, it's easy to understand. You want to make sure that you're sharing it not only with your executive management, but also with your audit committee, and make sure that you're reviewing it quarterly, semi-annually, or annually. And then lastly, you want to identify items that may call for a reassessment of these risks. So a risk assessment in and of itself is not stagnant. It actually is a dynamic document. It's actually living and breathing, meaning that just because you called something high risk or low risk or medium risk at a particular point in time doesn't mean it's going to remain that way through the end of the year or through the end of the following year. So for example, some of the items that can call for a reassessment of risks is if you have any new system implementations, if you have new technology, are you acquiring new businesses, new companies? Are you letting go of certain business lines? Have you changed your business model? Has your control environment changed? Has your business environment changed? And then what you'll need to do is you'll need to update your audit plan as needed. Now we'll go on to the next slide, because what I want to show you here is an example of a change management questionnaire. And I don't know if on your screen you can read the actual words. It might look a little bit small, but this will actually be part of the templates that you actually downloaded. But there are 4 key areas on here that you want to look at. The first one is, have you had any organizational changes? Have you had any system or technology changes? Have you had any process or reporting changes? And finally, have you had any significant policy or regulatory changes that impact your current business environment or control environment? So in answering these questions, you would give this out to your managers, in the different business units or in the different large business areas. And what we're asking them to report back is, are the significant changes that would impact the way their current control environment is behaving, the way their current business environment is behaving, or does it impact their current business processes, and or does it impact any key controls in their area? If the answer is yes to any of these questions that are listed here, you want them to be able to say, okay, when did this change occur? What is the impact of this change? And what specifically changed? And I want to know, is this something that's going to be ongoing? Is it a one-time event? And then at the very bottom of the template, we're asking the managers or the business line managers to identify any planned or significant changes, right? People, process, technology, or policy, or regulatory compliance issues that are happening in the near future. And the reason we want to do that is there's a benefit to reporting these regular, what I call change management issues, and there's an impact to it as well. One, it helps us to identify areas that potentially could require a new walkthrough or new areas that could be added to our audit plan. So we talked about the risk assessment being dynamic. Well, if I'm about to test something or go in and audit an area, and all of a sudden, I get the response back from my manager saying that all these things change for that particular area that I'm going to audit, then that could lead me to postpone my testing, update my audit plan, perhaps update my testing strategy, and also update my risk assessment. Also, by putting in a change management process, it'll help me identify current and future areas of risk, right? And sometimes one of the things that we have as a complaint from an auditor perspective is, wow, I wish I had known that earlier. Had I known that earlier, I could have either allocated more resources or transferred resources to more high-risk areas, or wow, I've had such a large system implementation, perhaps it doesn't make sense for me to go in and audit this area until the system or whatever it is that got implemented is more stable. Lastly, we know as being an auditor, right, we have 2 roles that we serve. One is advisory and one is the assurance. Everybody knows this as the policeman or the cops, or we tell people everything that's wrong. But one of the things that we want to highlight and that can also drive value to our organization is our consulting experience or our advisory services. So in this case, by doing these change management activities, it'll give us an opportunity to identify, hey, new systems or technology coming on board. Okay, let's be a part of that. If we're part of that at the beginning, we can help steer those conversations to perhaps have them consider other areas that they haven't looked at, or perhaps, tell them that here are things that they could possibly be doing differently. Now, also recognizing that if we provide consulting services, we can't also be auditing that same process. But we can also be looking at new regulations that may impact the organization. But primarily, if the organization or business is accustomed to reporting these changes, the plus side, as we all know, that there will be fewer surprises. Now, you'll see this template standing alone by itself, but you'll also see many questions embedded in the risk assessment questionnaire. So that way you have the option of using either or. Some organizations, like to send out a Word document that's, sent by email and people provide responses. Others like to put it in an Access database, tabulate everything. Others like to send it in an Excel document, or others use SurveyMonkey or SharePoint or some other mechanism to kind of conduct the change management process. But what it does serve is that when you consolidate all the responses, hopefully you start seeing a pattern of areas that perhaps rise to a level that you need to reassess, your audit plan and your risk assessment process. Sonia, is there anything you'd like to add?
No, I actually think that now's a good time to go through the templates. So these are the, let me share my screen. That would be kind of nice if I did that. So share screen. Great. Okay, so let's go through the risk assessment questionnaire item. So Monica, do you want to just kind of lead this? We've got about, I would say 3 minutes for yours, and then I got 3 minutes for mine, so we can have some Q&A. Do you want to briefly kind of cover some of these headers?
Sure. So what you see on here in the sample risk assessment questionnaire, we can go quickly through the headers. You have an area for strategies and objectives. As I mentioned earlier, the IT applications. You can list your policies and procedures, but if you scroll further down, keep going, please. There's a section, there's a section in there that talks about general questions. So what type of operating losses did your system or did your organization, incur? What were the key issues, with third parties? Did you complete any risk assessments for your areas of responsibility? So some areas do their own risk assessments, were there, and if they did, what were some of those results? This just provides an opportunity for the business manager or the senior manager or even the business leader for that department or business unit or significant area to go ahead and provide responses, and then this would come back to the internal audit department, and based on the responses that are here, they would determine, okay, which areas do I want to consider, as part of my audit plan. And then if we move over to the next template, the risk score matrix.
This is the scoring one.
It's the same thing that you saw earlier.
Yeah.
Yes.
This is a good one to cover.
And then the risk assessment example here, you have one, this is like for financial line items. You see the account number, you have a place to put your balance, and then this doesn't have formulas, but it's all color-coded. But the neat thing about this one is not only do you have your risk factors, but at the very far right, it talks about your financial statement assertions.
And then there's a
and again, these templates are correct.
There's a drop-down feature
so that you can select.
Yeah, I like this template a lot.
Yeah.
This is definitely more of a SOX 404 kind of template. And then let's cover this other template. This one's also a neat one for risk assessments.
Correct. So this one's kind of like the first one, but on steroids. It's actually, it's very, very thorough. It's very thorough. It gives you the financial statement line item, the account number, the SOX process associated with it, the business unit that's impacted. It gives you an opportunity to put the balance not only for like simple current assets, long-term assets, short-term liabilities, long-term liabilities. And it gives you an opportunity to list the applications that are used. But the neat thing about it is it also has the risk factors to the far right, but it explains, the overall risk and the classification of the process. So are these routine transactions? Are these non-routine transactions? And the nice thing is that, there's a legend at the very bottom that explains, what the different colors mean and how to use it. And it's very simple. It's high or low, but you can customize that any way you wish. You may decide that, hey, I like the first one, but the second one has more things that I like. I might decide to merge them. If we go on to example number 3, This one's really interesting. It gives you a place to put the process, describe the risk in a very simplified fashion. It gives you an opportunity to put the risk category. Is it financial? Is it IT? Is it HR? And then the strategic initiative. So what it's saying is, what is the corporation's or the organization's strategic initiatives? Is it, I put an example here, standardized reporting. And then what's the impact rating? So is it high, medium, or low? Did
Oh,
it
I'm
stop
sorry.
sharing, Sonia?
Sorry about that.
That's okay. And then it gives you the likelihood and the risk rating. But the good thing about it is that you can pick the letters, or excuse me, the words that you want, but there's formulas in here. I don't know if we can see the formulas. There you go. So there are formulas in here. So if you want to modify what the impact rating or the likelihood rating is, you can change the words, but then you should change the corresponding formula. And what it does is based on your response, it assigns an overall risk rating, which is in column
Right.
J.
And I would tell anybody who's going to use this template, if you're the reviewer, you probably want to, double check these formulas. I just did F2 to see what the formula is like. And you can see there's a lot of text, so you want to train your staff that they've got to type it exactly like this. So if they're going to use low, it's got to be uppercase L, lowercase o and w, etc. So as long as there's some training involved on how to do it, it's fine. I like the fact that things could be a little automated in Excel, but just food for thought for those of you who like to use Excel. This one does have a little bit more complicated stuff in it. And then this one's the audit plan.
Right, and what you see here,
Oh, go ahead.
right, this is an audit plan. Now, what I didn't say earlier was this couldn't have been made possible without the contribution of our audit community that, provided me with these templates. So I have to say a big thank you to my audit peeps that sent these templates over to me. Some of them have been very, very scrubbed to make sure that they're genericized. But this particular audit plan takes into consideration all the 4 steps that we talked about in our planning process. And it includes an area for you to put what your current risk rating is, what the prior risk ratings were for the prior year, so that you can see if there's a pattern. And as we scroll all the way to the far right, it has those same risk factors lumped for you, and it gives you a percent. So you could say, is 10% financial risk, is 10% IT risk, and so forth. So it's a very comprehensive plan. Some organizations like to use Excel, others have, metric stream, teammate, or when I used to work at the bank, we had Paisley Auto Audit. But there's many different ways that you can capture this information. And the last template that we're not going to go over, but it is included for you, is the same change management questionnaire that we shared earlier with you on slide 13.
Yeah. Yeah, this is
And now I will turn it over to Sonia because I think we're about running out of time.
Yeah, no, we're definitely we're good. We're gonna All right. So I wanted to cover risk component that has the most difficult time in terms of transition. And that's principle 9, because you're supposed to identify, analyze significant change. So earlier I mentioned about a case study that most of the participants, when I do a live session, most of them get it wrong. I was holding out one of our templates for the transition to the new framework, this is just one very tiny screenshot of it, but our template has basically the principle, it has the attributes, or it's now called the points of focus, but there's actual page numbers and key approaches or documents. If I had to audit the transition to the new COSO framework, we actually provide you areas where you could reference to like what you would want to gain in terms of an audit evidence. So with that being said, we have a YouTube channel. My professional request is that you do subscribe to the channel. The template, you want to go to the video called COSO Transition Template Webinar, and then I cover how to augment that template for multi-locations as well. Now, lastly, I've done this for our COSO implementation group members. We have a lot of value to provide, obviously, not only in this webinar, but me personally, we've created a control compliance analysis intake form. It's about an hour-long process, but the output of it is a report that essentially aligns to the core transition issues or challenges and opportunities, common failures that I see, audit evidence requirements that you may be lacking, and more importantly, it's aligned to a lot of the government standards like the PCOB, or it could be professional standards of the IAA or what the SEC wants to see. So I have 5 spots available with me personally, Sonia Luna. You would have to email my admin, and she's the one who collects everybody's information if they want it. So this is free of charge. This is my pro bono to the community. You have to email info@avivaspectrum.com, and you have to have the subject line item say CCA reservation, and you can have this analysis done for you. Now, I definitely want to promote the community. I'm probably going to tap a few of you on the shoulder and ask you to conduct these joint webinars on something that you feel passionate about. I'm very honored and privileged that Monica is here with me doing this, again, free of charge to the community on risk assessment templates. She did an awesome job reaching out to others to get these templates and then scrub them down. She scrubbed them down to make them, generic so that we could all use them. And I mentioned earlier in the conversation that at avivaspectrum.com/blog is where you can download it. My Q&A session is open. We had our first question actually asking about what are the thoughts of mapping risks, in any of the templates to the 17 COSO principles. I would not use any of the risk assessment templates that we use to map to that. I would actually create a single work paper item. So I would say if I had to give the audit committee a deliverable and it was a transition map item or a memo, I would say this was the exercise I went through. And then the support, I would have an Excel spreadsheet. I would gravitate towards our template because I created it, but it doesn't matter what template you use. I would want to list out those 17 principles, and I would say, by the way, my risk assessment components, principles, it goes 6, 7, 8, and 9. Those 4, most of those are going to be covered by other work papers, and I would just reference those other work papers. I would not map one-to-one, row by row. I think it's a little too much. And then in terms of the templates, they are going to be in Excel on the website, so you can download that. Today you can download the PDF version if you'd like to just print it out and get a preview of it. And then another question, probability we can use data validation for low. I want to get clarity. Maybe you can ping me online what that question is. I want to answer it, but I don't know what the context of that. And let me see. I answered that question. Okay, are there any other questions that you folks would like to have us covered, since we've got Monica, who's on the industry side, actually doing the risk assessments for a very large organization, and then me on the service side, what I'm seeing with my clients. We'll leave it open for an extra minute longer to see if there's any other questions. Okay. Well, Monica, I want to thank you again for being such a champion, offering your services to the community, and especially covering some of those awesome templates that, again, you put a lot of effort, your own personal effort, in scrubbing that down and covering those core aspects of how to use those templates. I think that's very practical for them. And again, thank you, Monica, for your time with us today.